Good afternoon, everyone. Good afternoon. Thank you for joining us today. Good afternoon, everyone. Good afternoon, good afternoon, good afternoon. Thank you for joining this bootcamp today. Thank you. This is the 100 Smart Investors Bootcamp. Okay, so good afternoon once again, and we welcome you to the 100 Smart Investors Bootcamp, anchored by First Asset Management. My name is Ayodele, and I'm the team lead at First Asset Management. While we wait for other attendees to join, I'd just like to give a brief background about the 100 Smart Investors campaign. This campaign is not just a product push, it's a national call to confidence, using stories, actions, and education to gradually guide Nigerians like you and I to the online community and eventually capital growth. So pretty much what we're saying is we are empowering our attendees today. We're building your confidence so that when you hear about this investment words, you are enlightened and you're empowered, and there will be no fear of missing out, because at First Asset Management, they've provided that guidance for you. So thank you everyone for joining today. We have 4 panelists that have the experience and also the knowledge to provide today. The first bootcamp was very interesting, very enlightening, and we had a lot of questions from our attendees. So today we'll be discussing on how to invest in equity funds and why is it important to invest now and to invest basically in an equity fund. With me today, I have 4 speakers, and I'll let the speakers introduce themselves. I'm sure you'll be interested, and by the time you listen to the speakers, we would all go back and think about or even start our investment journey today. So I'll start with you, Laura. Please introduce yourself.
Thank you, Ayo. Thank you. And thank you so much, everyone, for joining us. Like, we have so many people. I'm so excited. So my name is Laura Fisayo-Kolawole. I work at First Asset Management. I run the Equities and Alternatives portfolio management team here, the solutions business. I'm really, really excited to be here. We manage money on behalf of individuals like yourselves, companies, in mutual funds. So we'll talk about those in portfolios for private clients, so many solutions, but ultimately we're all about managing money for investors. Thank you so much for joining us.
Thank you so much, Laura. I'll move on to the next female, which is Fiona. Fiona, please introduce yourself.
Hello, good afternoon, everyone. Thanks for joining us this afternoon. We are very excited to have you. We're excited to share this journey with you. My name is Fiona Ahimie. I am the Managing Director for First Securities Brokers Limited. First Securities Brokers Limited is a stockbroking arm of the First Holdco Group. What do? We guide our investors, we handhold investors, and give access investors to the Nigerian capital market and also the global markets. Thank you.
Thank you, Fiona. And I'll move on to Gbolahan.
Yeah, good afternoon, everyone. Thank you for taking our time to join us this afternoon. I am Gbolahan Ologunro. I work at First Asset Management as a portfolio manager. My job entails coordination and supervising implementation of investment strategies for our SEC-registered mutual funds, in addition to discretionary portfolios that we manage for clients, so be it retail or high net worth individuals. And I'm so much excited to be part of this bootcamp this afternoon.
Thank you, Gbolahan. Thank you. Before I move on to the final speaker, I'll just like to remind our attendees that you can drop your questions as we go on in this campaign or this webinar in the chat box, please. We are available to answer any and every of your questions, please. So finally, Abiodun, please introduce yourself.
Hi, good afternoon. It's good to be here. Good afternoon, everyone. Thank you for joining us at this webinar. My name is Abiodun Adedotun. I do sales for Securities Brokers Limited. And at Securities, what we do basically is we trade in securities, equities, which you know as shares. We do fixed income, stocks, commodities, and whatnot. So I'm in charge of sales for the business, and it's good to be here. Thank you very much.
Thank you. Thank you so much, speakers. Fantastic. I'm particularly excited about today's webinar because the first bootcamp was very interesting and, it was enlightening. And from that webinar, we received a lot of questions, which is why we're here today to go on the Bootcamp 2.0 and talk about how to invest in the equity fund. We'll be sharing life stories and also giving you nuggets and our own knowledge on how to empower you and strengthen you and give you the confidence to invest in equities as we go on. So Laura, are you ready for me? I'm coming on with the first question to you today. Laura.
Okay. Yes, I think I am. So what I'm going to use another device.
Okay.
Maybe you'll see my video on the one side.
Because we've seen comments talking about your network.
I hope this one is, but is this clear?
Yes, I think this is better.
Okay, yes. Thank you, and thank God.
Okay, we have to make it work for our attendees, whichever way. Thank you very much, Laura. So the first question that we have here is, what is an equity fund? We've had people ask us, what exactly is an equity fund? People say, I have shares, I have my stocks in, somewhere. But what exactly is an equity fund? Can you help us with that?
Thank you, Ayo. So, when I think about equity funds, and I think I'll maybe start with what is a fund, right? If you think about a collection of people, so say you and I, all of us on this call, we all have different amounts of money, 50K, 100K, whatever it is. Say we all come together, we pull our monies together, suddenly we have 1 billion naira, 2 billion naira, and we decide to hire a manager like First Asset Management to manage it. And we tell that manager we want to invest in equities, buy the best or whatever it is you think we need to own if we want to participate in the equity market. When we put that together, suddenly you have a fund. So really it's something like that. Now, we as managers, as First Asset Management, we already have funds that we have registered with the SEC. And those funds were created to invest in equities. So essentially what that means is investors like you and I can invest whatever we have in those funds. Ultimately, you have a situation where that money is pooled together. So we already have a fund as First Asset Management. You can invest, I can invest. When that money is pulled together, the 1 billion naira, whatever that money is then invested by us as asset managers in equity markets. Then all of us who have joined and come on this journey with us, we can all share the returns. So just imagine, it's quite exciting for me because really it means that all of us can benefit from the expertise of the First Asset Management team, right? So you don't have to think about what stocks to buy. You don't have to worry about all of that. You can just sit back, you can enjoy your passive income, whilst you're sleeping, you're working, you're playing, you're doing whatever it is that tickles your fancy. You have money in the background working for you. You have a manager whose only job is to make sure that you generate and you enjoy the returns from the funds. And that really is what the equity fund is about. It's all of us coming together. We're putting all our monies in a single pot. The manager is managing it on our behalf, and we all share the returns, registered by SEC, as the regulator of the industry.
Fantastic, Laura. I particularly like the word when you said passive income, because, well, here, a lot of us are workers and we want some passive income. We want our monies to work for us. So I like the idea of a fund helping us. I really don't want to bother my head on what the stock price is or which one to buy and all that. I think that is very interesting. So going on to Abiodun, I would move it to Abiodun right now. Laura has talked about the equity fund. Can you tell me the pros and cons or the difference between an equity fund and me investing directly in the stock market? Because I know purchasing shares or stocks is very popular, at least from our parents, our at least I know my parents used to talk about, oh, I bought these shares, I bought that one, but they didn't used to talk about the fund. So can you tell me the difference, or would we say the pros and the cons in investing directly versus investing in the fund?
Of course. Yeah, thank you very much, moderator. The
Mm.
difference between investing in shares directly and subscribing to an equity fund is when you want to invest in shares directly, you first have the headache of what company and what stock should I buy into. Now you have the funds, what stock should I buy into? For example, say you have 100,000 naira. How much should I allocate to? Okay, I like three, four, five companies. How much should I allocate to A, B, C, and D? That's another headache. Then you now have to start tracking. Then you say, oh, I don't get my dividend, I don't get my bonus shares on time, and things like that. But with an equity fund, all of this is completely eliminated. You've ceded your right to think about all these things, to track what's not and what it is to the fund manager. The fund manager gets on top of it and is able to manage everything. The end-to-end thought process of saying what stock selection should I be looking at, what type of return, is this still matching my objectives or not? The fund manager has been given the right to do all this for you. All you just need to do is chill, relax, and just continue to allow the fund manager to do his or her thing for you, and you get your reports. So that's the difference between an equity fund and you investing directly.
Oh, wow. Okay. Okay. So what I also got is, or what I can summarize from what you mentioned is, we can start small with the equity fund. Unlike with as little as any amount, we can start with the equity fund. Unlike with purchasing shares directly, you have to have some certain amount. And then you also have to have like knowledge, in-depth knowledge, the stress of having a stockbroker, the stress of thinking, oh, when to exit a fund, when to exit a particular stock and all that. So that's what I got from that, which is why the fund is actually very interesting and, better to go for, right? So Abiodun, I'll move on to Fiona now. So Fiona, can you just break down this whole having a stockbroker and versus an equity fund? What is the importance of having a stockbroker and as it relates to an equity fund?
Also, Ayo, and good afternoon once again, everyone. So a stockbroker is an intermediary that connects you, an investor, to the capital market or to an exchange. Now, for you to be able to access an exchange in Nigeria, you need an intermediary that has been licensed by the Securities and Exchange Commission. And if you've noticed, there's a lot of talks about people who have, gotten into Ponzi schemes and lost a lot of monies because they did not check to see that the people they are doing business with were certified by the Securities and Exchange Commission. So stockbrokers in Nigeria are supposed to be the intermediaries that will stand or bridge the gap or avail you the platform.
Hi, Fiona.
Want to whether it's commodities, whether it's and for a licensed firm, and this is the stockbroker that stands for you. Now, when you decide to invest using a fund, your fund manager is connected. Your fund manager has a stockbroker that executes or carries out its mandate. So whilst you have pulled all these monies together, for the fund manager to be able to deliver this value to you, they have to go through a stockbroker who executes the transaction for them. Or they can decide to do this themselves, but the stockbroker needs to give them access to a platform where they can be able to execute, your orders or execute the orders on your behalf.
Oh, okay. Okay. Thank you, Fiona. So the stockbroker is the go-between between the exchange and yourself. And if you're invested in an equity fund, you really don't need to bother about your stockbroker because your asset manager already does that on your behalf. Okay, so coming back to Laura, please. I just have one question. Please, I would like to remind the attendees that you can drop your questions in the Q&A. We see some questions coming. Please continue to drop your questions and we would answer these questions. So Laura, somebody asked, what is the difference between the money market fund and the equity fund?
Okay, so that's a great question. And I think that question also even feeds into the difference between an equity fund and a mutual fund in general, right? Mm-hmm. Now, whether it's a money market fund, equity fund, bond fund, etc., we start off by saying a mutual fund is, if you remember my story where I said we all pull our monies together in a vehicle that is registered by the SEC, we can all pull our monies in there, and that vehicle or that portfolio or that pool of money is designed to invest in something in particular. That is a mutual fund. So when we pull our monies together to invest for a specific purpose, managed or rather registered by the SEC, that's a mutual fund. The questions when you then have money market funds or bond funds or balance funds or equity funds, that then tells you what is this mutual fund created to invest in. So a money market fund, for example, is a situation or is a fund where all of us can put our monies together, and that fund is only allowed to invest in money market instruments. So money market instruments are short-term instruments, short-term fixed income instruments like treasury bills, commercial papers, fixed deposits, etc. So if you remember when I spoke about equity funds are a similar thing where we pull our monies together, but they invest primarily in equities. The real difference then you'd have is ultimately the money market fund, because it invests in lower risk fixed income assets, the fund itself is lower risk essentially, because the kind of returns that you get from it would be the returns you get from money market instruments. So the fund is low risk. Whereas with an equity fund that's invested in equity. So for example, from the SEC's rules, equity funds must invest at least 70% of their assets in equities. So what that means is if a fund says it's an equity fund, 70% is in equities, that means that fund's a lot more volatile, its price will rise and fall, it's a lot riskier than a money market fund that invests 100% in money market instruments. A money market fund cannot invest in equities, it cannot invest in long-term bonds, it can't do any of those things. It's meant to be a low-risk vehicle. So that's really the difference. But I think the first thing is we have the whole mutual fund space, which is basically just a vehicle, various vehicles that are created by different managers for specific purposes. So then they will tell you by the fund's name, the kind of purpose. So when they say, oh, I have a bond fund, it means my fund invests in bonds. I have an equity fund, I have a US dollar bond fund. So then you start hearing all those names about that. That should kind of give you an idea of what the fund is investing in. But that it's a fund is the very first, I guess the first thing. So it's a broad vehicle that can do many things.
Okay, superb, Laura. We've talked about, I like the way you started breaking it down from explaining what a mutual fund is, and then talking about what the money market fund, and then what an equity fund is. That's very interesting. I'll just talk about the first bootcamp where we talked about understanding your risk appetite, and then also empowering yourself with information, and going with a company that is SEC registered. Visit the SEC website before you invest in any fund or go with any company that you would like to invest with. So, which is what we're doing today. We're trying to empower our attendees before they go for it. They should also, follow the steps. So, Laura's told us what, the difference between the money market fund and an equity fund is. Can you tell us the offerings at First Asset Management, the equity fund offerings at First Asset Management? The types of offerings, the importance of these offerings, what they can do. I know that there's a frenzy going on with the stock market this year, performing at about 34%. And, we won't want our attendees to have that, oh, I missed out, because I know last year some people came back and said, oh, I missed out, in this. How can they, just tell us what's First Asset Management, the type of equity funds that we have.
Yeah, thank you, Adele. So for First Asset Management, we have two equity-based mutual funds. The first being FBN Balanced Fund, and the second is FBN Smart Beta Equity Fund. So I'll just pick it up from what Laura mentioned earlier. For the Smart Beta Equity Fund, this is a fund that seeks to provide capital growth for investors who have a high risk appetite, and that's because the fund, based on SEC regulatory guidelines, must invest at least 70% of its assets in equities. So to that extent, that fund is, a fund with, or best suited for an investor with a high risk appetite. On the flip side, on the other hand, the FBN Balance Fund also seeks to, again, provide capital growth for investors. However, this fund has much lower exposure to equities based on, again, SEC guidelines. The fund is expected to maintain a minimum of 40% exposure to equities, with the maximum now pegged at 60%. So to that extent, the fund, has leeway to invest in assets that are sort of less volatile compared to equities, money market instruments, and bonds, and that would, in a way, help to cushion sort of the volatilities you'd see within the equity segment of the fund. So for the FBN Balance Fund, I would say it has, a much, lower level of volatility compared to the Smart Beta Equity Fund, just given the fact that from an equity exposure perspective, the exposure is much lower, compared to the FBN Smart Beta Equity Fund. With that being said, there are striking similarities between both equity funds. For one, in terms of the minimum entry point, you can invest in both funds with as low as 50,000 naira today. In Nigeria's context, we think that's a fair amount, to gain entry into an equity fund. Like Abiodun mentioned during his opening remarks, we think one key challenge that most of us face here today is when you want to begin your journey of investing in the stock market, you are contemplating which stock should I pick, which stock should I invest in. So with an equity-based fund, be it FBN Balance Fund or the Smart Beta Equity Fund, you have nothing to worry about, because again, you've entrusted your investment with an investment manager and an asset manager, be it like First Asset Management, to sort of manage the investment on your behalf and ultimately deliver good returns. To also, sort of provide some context as to how these funds are fared, over the past 3 years. You mentioned earlier that this year has been quite a spectacular year for equities investors. Year-to-date return currently at about 34%. At some point, in the early part of August, we are at about 41% year-to-date return, but the return has sort of moderated a bit. But notwithstanding, the return is really quite, impressive. And I think not just this year alone, if you look at how the market has fared in the last 3 years, I would say anyone not invested in, equities is really on a long thing, like people would say, on the streets, right? Because in 2023, the market returned about 45%. 2024, just last year, the market returned another 35%. And this year, we are on course to, I think, post another strong double-digit return between 35 to maybe, 45 to 50%. So I would say that it's been quite, an interesting ride for equities investors over the past 3 years. In terms of how our funds have also fared, again, just to borrow the words on the streets, when people would say, it shouldn't be about cho, you have to sort of, show workings, right? So, yeah, exactly right. So, if you look at the FBN Balance Fund, for instance, in 2023, we delivered a return of 46%, to unit holders. The following year, we delivered about 32%. For the Smart Beta Equity Fund as well, in 2023, the return was at about 64%, and last year, we delivered about 43%. In terms of how we've also fared thus far this year, as of, close of market yesterday for the Smart Beta Equity Fund, the return was at 59%, and if you look at 49%, sorry, and if you look at the balance fund as well, return was at 36%. If you compare the returns on both funds again to the broader gauge of the market at 34%, we think certainly, we are doing much better than the entire market. And this again speaks to, you having that confidence that you can entrust, your funds to First Asset Management to manage it on your behalf. Just give us your funds, go to bed. You have absolutely nothing to worry about. You can be rest assured value would certainly be delivered to you. So thanks, Ayodele.
Thank you. Thank you so much, Gbolahan. Our attendees have heard, our First Asset Management, we show walk-ins. We're not just all about the talk. We show our walk-ins. And, I have a question here in the Q&A, and the person has asked that, sorry, apologies. I'm trying to read out the question here. Someone asked, how do I start the equity fund from abroad? Can I use my accounts in First Bank? I'm an already existing account holder with First Bank. I would like to say that you can invest in the equity fund from wherever you are. If you're a diaspora client, you can visit us or send us an email at invest@firstassetmanagement.com. We would put the email address, or you can just visit our website, which is www.firstassetmanagement.com. We would provide you with all the information there, and you can just start your investment journey with us. I'll go to the next question, which is for Laura. Laura, we have another question here for you. Someone is asking, how can I invest on behalf of my children in the equity fund?
In fact, you can and you should, right? Now, when you think about equity markets, and your GB spent a lot, Gbolahan GB spent a long time talking about the way equity markets have performed. And when people talk about equity market performance, especially when we've had good years like this one, where we're saying, oh, markets are up 30-something%, 40, yeah. It's easy to focus on the short term, but I love the fact that when he was talking about it, he talked about 3-year returns. And the truth is, when you think about equity markets, you want to be thinking 3 years, 5 years, 10 years. The truth is, equity markets, and because of the risk involved, because to be honest, if something can rise 50%, it can fall 50%, right? And because of the risk involved, we always encourage investors to think long term. And the one thing that children have, God willing, is time, right? They actually have the ability to take risks because they're young and they have the time to make the money back. If they make any losses in their portfolio, in truth, they have 20, 30, 40 years, they can make that back. And so that's why actually equity investing is really perfect for children. So please, please, please open investment accounts for your children. Imagine if like your parents had bought Presco when it listed in 2020, in 2012, it was like 9 naira listed.
I would have been in Nepo baby.
Naira. Imagine your parents have in your name and it's gone from 9 naira to 1,480. Of course, I've picked a winner, right? So they've been really rubbish investments, but I picked point is that there are opportunities to make long-term returns in good quality companies. And when you work with managers, again, like Abiodun alluded to, when you work with the manager's job is to think about these things on your behalf. What are the quality names? What are the names that I can buy that can create a long-term story for my kids without you having to chase for the dividends, for the this, for that, all the drama that comes with direct equity investing, So if that is not, if you don't want to do that, if you don't want to do it yourself, then this is an excellent way. But ultimately, working with managers can give our children access to these real success stories. So I always encourage, when investing, we can and we should invest for our children. I'm sure, we are very, very open. I think we have lots of kid accounts, right? Lots of children that where the parent, because as a parent, you'd be the one managing the account on your child's behalf, obviously. And so we're very, very open to that, and we encourage all parents to do the same.
Okay, that's nice to hear. One thing I've heard from you is note that the equity fund is long term, and if it's perfect for children, because yes, they're children, they still have a long time ahead of them. I have another question, and this would go to Fiona. Someone has asked, how does one find out where shares or stocks offered by a company was sent when a bank accepted money for the purchase of those shares? So I think this person is asking about the registrars, or how he or she can receive his or her dividend.
Okay. So when you invest in any company, before you fill the forms and subscribe, you need to have something we call CSCS account, that's Central Securities Clearing Systems account. Now, when you have this account, that is on the basis at which you go and subscribe to any company. And when you do that, immediately allotment is made, the shares are credited to your account. Now, every company in Nigeria has a registrar. That is somebody who keeps a record of movement in and out, by investors. So when you invest, your shares are credited to your CSCS account, which is a unique, number to you under a particular stockbroker. And then dividends that are paid into your bank account that you provided when you're opening accounts from the registrar. So if you have a scenario whereby you have either not seen the shares you've paid for, you have to visit the stockbroker that you have used, or contact the company's registrars to tell them where your shares have been deposited. And if you've not received your dividends, you also go back to the registrar or go to your stockbroker, who can assist you and guide you in retrieving your investment. Ayo, before I stop, I want to give a story about how I started investing in equities.
Oh,
So,
please go
I
ahead.
started investing in equities right after, thank you, right after university. And it was easy, right? There was not a lot of information around, but the market was kind of booming. But I was not a greedy person. So I'd invest, and if I make like 20%, 25%, I'll quickly run away, cash out. That's how I looked at it. I looked at something like speculation. I didn't understand fundamentals. I didn't understand looking at the trend. I didn't understand anything at all. So I did that for a bit, and I noticed that anytime I visited a particular company, the company starts to go up, and I'm wondering, what the heck? Why did I even hesitate? Why did I just wait? And it went on for a while. Then it got to a point, because I was not greedy, I wasn't ready to just wait in for the long haul. So I'll just take my 25% and just disappear and come back again. It got to a point where I was not making profit. And then I would say, oh, this stock, instead of me realizing my loss on this particular company, I said, no, this one is for my children's children. I'm not even married. It's for my children's children. So anybody asks me, oh, this thing is not making money. No, it's my children's children. I'm not in a hurry, just leave it. So you can imagine having to combine these two scenarios with having somebody do the thinking on your behalf, do the analysis on your behalf, do everything on your behalf, and then you are just chill. Now I'm smarter. Now I know better. Now I know the parameters to look at before I make investments. So I'm making smarter and better investment decisions. But you need to kind of find a way of balancing it. And a mutual fund do help in this regard. Thank you.
Thank you. Thank you. I'll stay with you, Fiona. I'll stay with you because you've talked the story you just gave us is very interesting. A lot of people have done, we've been through these mistakes, and that's really why we're here today. So please enlighten us. Let us know why is it important to be knowledgeable and have accurate information before you go into whether it's a fund or even investing generally.
Pretty much simple. The reasons why you're investing is because you want to make money. And the money you want to invest, you've worked very hard for it. Whether they dashed you or they didn't dash you or you worked for it, is money that you've earned in some sort of way. If you're not a nice person, nobody will dash you money anyways. So if you have earned this money the very hard way, why do you want to just put it into something and let it just filter away? Now, before you invest in any asset, no matter what it is, look at the fundamentals and the prospects of this business. And I'm not talking Ponzi schemes. When somebody comes to you and says, "Oh, I'm going to double your money in 1 month," even you look at it and be wondering, what exactly is this person going to do that is going to help him to double my money? If this guy had this opportunity to double his money, will he really bring me in? He's not going to bring you in. So before you go into any company, I think it's important that you do your homework. And the very, brilliant thing for us in this our generation is information is everywhere. If you want to know about MTN, what MTN is doing, just go to MTN's website. Go online, Google MTN, news about MTN, prospects, opportunities. You'll see so much information. So information is everywhere. There's research. In the past when we started investing, we didn't have, people who would, break down and crack down financials for us. But now we have it. There's research everywhere. All you have to do is just go on Google. And it's not everything on Google that is true. You need to verify. You need to check with your professional. That is why the fund managers come in. You need to speak to someone. That's where your stockbroker comes in. When you're having an idea and you're seeing different things on social media, and sometimes you can't decipher which one is true, which one is false. Your professional, the person that has been mandated or is authorized or have been licensed to guide you, is your go-to person. Speak to your relationship manager. Speak to the fund manager. This is what you're thinking, and then they will guide you better so that you don't lose your monies. Thank you.
Thank you so much, Fiona. That's very interesting, and I agree with you. Information is everywhere now. Do your research. Ensure you follow and invest in a SEC registered company so that and really that is why we're here. We're just trying to ensure that our attendees are empowered. Gbolahan, on to you. We have a question in the Q&A. Somebody's asking, can I lose my principal in the equity fund? And while you're answering that question, please talk about the different products we have at First Asset Management, and also telling us the entry points of our equity funds. So I hope I hope I didn't bother you with too many questions there.
Yeah, no, not at all, not at all. So yeah, I mean, it's possible for you to, lose your principal in equities investment again, just given the nature of equities being a high risk investment. I'm not sure if you have read, that famous book by the chairman of First Udco, making it big, lessons from, a life in business. Just to add to what Fiona said, Otedola himself, he had investments in Zenith shares at some point, I think in 2007, just shortly before the onset of the global financial crisis. He wanted to sell at about 60 naira. He didn't sell, because the chairman at the time, Jimovia, convinced him to still hold on to his shares, and he ended up selling it at about 12 naira. So that's to tell you that you need to have the guidance from an investment manager or a sound an investment advisor to guide you, to help you to monitor your investments, which again, I think it's an added layer of advantage when you invest in an equity-based fund. So I've spoken about the FBN Balance Fund and the Smart Beta Equity Fund. So either of both funds, will just give you that much needed comfort about the need to sort of be less worried about, the performance of your investment. And you can also even get information on the performances of this fund by making reference to our website. You'd download our fact sheet where we publish, which is published on a monthly basis. Just to see how both funds are faring. I've spoken about the minimum entry amount again to reiterate. For FBN Balance Fund and the FBN Smart Beta Equity Fund, the minimum entry amount is 50,000 naira, just 50,000 naira, and minimum holding period is again 90 days. But try to gain entry into both funds with a long-term mindset. Again, you'll miss out, I think, on equities investment if you are not patient enough, if you don't invest with the objective of staying over the longer term. Like Fiona has also mentioned, each time she sells her investment to her stock, that's when those stocks will begin to rally. So you've got to be very patient to reap the longer term benefits associated with equities investment. I'm not quite sure if I've missed any question, but you could just mention it to me ideally.
Okay, all right. So, just to reiterate, you mentioned that the entry level for the FBN Balanced Fund and the FBN Smart Equity Fund, they're both 50,000 naira. So you can start with as low as 50,000 naira. Can you tell us what those two funds have returned so
Yeah,
far?
so again, just to reiterate, as of close of market yesterday, for the Smart Beta Equity Fund, return currently at 49%. For Balance Fund, FBN Balance Fund, return currently at 36%. If you compare the returns on both funds relative to the broader gauge of the market, the All Share Index that has returned 36%, certainly we are doing, better than the entire market, which again speaks to that's benefit of investing with First Asset Management and delegating the responsibility of monitoring, tracking your equities investment to a fund manager.
That's interesting. Also reiterating the fact that our clients, they come first. We are here to ensure that they come first, that, ensure that their monies work for them. Thank you so much, Gbolahan. So, Laura, do you want to talk about some other investment solutions that we have at First Asset Management?
Sure. Okay, yes, so we have quite a few solutions. We have about 9 mutual funds as a business. And what we try to do as a house is have a broad range of funds, really regardless of the kind of investment that you're trying to have, or trying to portfolio mix you're trying to have as an investor. So we have money market funds, which is ultimately, it's in Naira. It is the simplest investment you can have. It's one that we encourage all our investors to have. It's a low risk fund like I talked about earlier. We then have funds that invest in fixed income markets. So we have a bond fund. We also have, interestingly, a halal fund, and that's really created for investors who are looking for ethical investment options, Sharia compliance, but frankly, any investor looking for ethical options. So we have those funds. We have our equity-based funds like Gbolahan has spoken about as well. So the Smart Beta Equity Fund and the Balance Fund. We have $2 funds, in fact, $3 funds, I should say, actually. We have the dollar fund where the minimum investment is just $100 and it invests in Nigerian fixed income in USD. We have the specialized dollar fund that invests in both Nigerian and global fixed income. And again, that allows our investors who are looking for exposure to fixed income instruments, but in USD. So you invest in USD, you get your returns in USD. It's extremely useful. We also have our blended dollar fund that invests in both USD fixed income as well as US equities. Again, it's a really great investment proposition for investors who are looking for, in USD, exposure to both fixed income and equities. And then we have an infrastructure fund. But ultimately, what we try to do as a house is provide investment options for those who are low risk, medium risk, high risk, who are looking for Naira, looking for dollars, looking for something for the short term, for the long term. You know, when you speak to our investment advisors like Ayodele and her team, they can understand what it is that you're trying to achieve. Because ultimately, when you think about investing, yes, there are many products and there's so many options and things to invest in, but it has to start with what you're trying to achieve. What are your objectives? What kind of risk are you willing to take? Are you able to take? And when you tell those things, they're able to put together a lovely portfolio for you that meets your requirements, the right sort of portfolio mix, and hopefully the start of a wonderful investment journey.
Superb. So we have something for everyone at First Asset Management, from your ethical funds, your short-term funds, medium, long-term. We have something for you at First Asset Management. I have a question that I would direct to Abiodun here. And the question is, just tell us the benefits. Why is First Asset Management the right investment partner? And also discuss the benefits offered by First Securities.
Okay, thank you very much, Tayo. Of course, First Asset Management is a desired partner. We've been in this business for several decades, and we have the top in line professionals managing assets. We are one of the biggest asset management company in Nigeria, licensed by the SEC. We take our customers seriously. We don't flout rules. We've been in this business, part of the First Bank Group. We have been woven into the fabric of the Nigerian society for over 100 years. So if you are looking for that trusted partner, you have to really follow those that have been around for a while, and we are going nowhere.
As they say, follow who know road.
Yes, so you have to follow the no road. So, and on the side of First Securities, yes, you have to choose First Securities brokers, because we are licensed by the NGX to act as stockbrokers. Also, we are also licensed by the NASD to act as broker dealer. We are licensed on FX to trade commodities, as well as we have the expertise, the reach across the globe to be able to serve our clients. We we are consistently ranked top 10 broker in Nigeria. Currently, I think we're number 3. In the month of July, we're number 1. If you're looking for a partner, we've been in this business as First Securities for over 30 years. So, and of course, we are also part of the First Bank family, and we've been woven in the fabric of the society for over 100 years. So if you're looking for that trusted partner to be able to do your execution seamlessly, you don't have to worry about somebody running away with your shares. Think about First Securities Brokers.
Thank you.
You forgot to say that we have the online platform where you can trade for yourself and access the market directly from anywhere in the world and any parts of town that you are.
That's the MD there.
Work, seamless, it's easy to sign up, easy to trade. So let me just testify. And actually, first, as I also have an app as well. So asset management app, securities platform, you can do what you want to do. You can be your best self with your passive.
Okay, a one-stop shop. That's who we are at First Asset, First Securities. Thank you, everyone. I have some questions in the Q&A here, and let me go through these questions so that I can ask our speakers quickly. I think we've answered some of the questions, right? I would just try and look for some questions that are yet to be answered. Someone has asked that, what kind of mix of equity do we have in our equity fund? Or can they select their shares or their equities that they want to purchase in the equity fund? Well, I think I would ask you this question. Someone is asking, we should talk about the portfolio mix, or if he or she can decide to select the names he or she prefers in the fund.
So to respond to that question, I would say again, recall that the essence of investing in an equity-based mutual fund is to delegate that responsibility of stock selection, the names or the companies to invest in to a trusted and sound asset manager, in this case, First Asset Management. However, the fund manager ensures that due diligence is being carried out before investing in companies. So in terms of reviewing the performance of companies, checking their financials, crunching the numbers, profitability analysis, liquidity analysis, gearing ratio analysis. So all of that would be carried out by the fund manager before investing on your behalf. And to just sort of, provide some context as to how both funds are sort of invested as of today. Again, as I mentioned for Smart Beta Equity Fund, the minimum exposure to equities is pegged at 70% based on SEC regulatory guidelines. Currently, the fund is at about 78% exposure to equities, with the balance being invested in money market instruments. For the balance fund, on the other hand, in terms of asset distribution, 56% exposure to equities currently, with 21% exposure to bonds, and the balance in money market instruments. So just to provide some context as to how both funds are being structured currently in terms of asset distribution.
Okay, okay. And please stay with me, Gbolahan. Another question here is, how do you handle liquidation? That is, if an investor wishes to exit, is it possible for assets to be sold off? And if yes, how quickly can assets be sold off and credited to me?
Yeah, so if you look at what I just mentioned regarding the guidelines for both funds in terms of asset allocation. So for both equity funds, even though they both have exposure to equities, and if you sell equities today, current settlement cycle is T+3. So does that mean if you liquidate your investment in both funds, you would have to wait for 3 days? No. And that's because both funds have exposure to money market instruments. These are, assets that are more liquid, easier to sort of convert into cash, whether you place money with banks or invest in treasury bills. So those assets can be easily converted to cash within a very short time frame. So to that extent, if you send in your liquidation request either through the online portal, or you send your redemption form to your relationship manager, within 24 hours, you would get the proceeds of your liquidation in your designated bank account. So both funds are also very liquid to meet up with client redemption request promptly.
Thank you, Gbolahan. I have a question for Abiodun or Fiona. Someone has asked, how can someone transfer his or her stocks from another stockbroker to First Asset Management or First Security?
Okay, I'll take that.
Mhm.
All right. It's pretty easy, right? The process of transferring your stock from another stockbroker is called intermember transfer. You can only transfer between stockbroker from one stockbroker to another. So pretty much the house that your current stockbroker, the one where you have the shares sitting, is called the resident house. Where you are trying to move to is called the target house. So all you need to do is you need to ensure that your KYC is in place with the resident house, and you do KYC with the target house. KYC basically means know your customer. The company will ask for your information, your bio data, you have to provide your BVN, your ID, utility bill, and whatnot. So once you've done that, the target stockbroker is going to give you forms to fill, and once you're able to complete that, they have to approach the resident house to move the stock, and it's just as simple as that.
Okay, okay. Thank you very much, Abiodun. Thank you. So we have some other questions that I'm trying to, get from both the chat and the Q&A here. Someone has asked about risk profile. They're asking, what is the risk threshold for the equity fund? Gbolahan, do you want to take that?
Yeah, again, to reiterate, right, for the balance fund, again, the risk profile is fairly balanced, again, because the fixed income sleeve of the portfolio just helps to cushion the volatility within the equity segment of the fund. On the other hand, for the smart beta equity fund, obviously, I mean, more allocation to equities based on SEC guidelines, and I mean, to that extent, volatility, I mean, on that fund tends to be higher.
So, what you mean is medium to high risk. Is that what
Yeah,
it means?
medium to, yeah, best suited for investors with medium to high risk appetite, and for balance
Appetite.
fund, risk is, I mean, broadly stable. So I would say medium risk for an investor with a medium risk appetite.
Okay. So what about your investment horizon? Please, can you talk about it? Because, I see some people comparing the money market fund to the equity fund.
So in terms of investment horizon, again, I would place emphasis on the long-term investment horizon. Equities investment by nature are designed for investors who have a long-term investment perspective. So to that extent, I would say, even though, I mean, by design, both funds have stipulated a minimum holding period of 90 days, but I would say if you invest in both funds, try to have at least a 2 to 3 year investment horizon to be able to reap the longer term benefits associated with equities investment. And I will cite an example about, I think, sometimes in 2019, a company that we all love so much, I mean, came to list on the exchange by introduction, MTN, at about 19 naira. Today, MTN is worth over 450 naira, about 435 naira in the market today. So again, at some point, I mean, the shares went to as low as, I mean, 200. If you had exited then, I mean, you would have sort of hurt yourself now, because you'll be biting your fingers that, oh, MTN is now trading at about 400 naira. So, in essence, the point is the gains associated with staying for a longer period in an equity mutual fund cannot be overemphasized. You would certainly reap the benefit if you can be patient enough just to wait it out over the longer term.
So for investments in equity fund, you need to be patient.
Patient,
Patient. I think that is the word, the watchword there. You can't it's a medium to long-term investment horizon. And I have this quote here that says, fear makes us reactive, but smart investing makes us proactive. So there's no need to have or to be scared. Just go for smart investing so that you can actually be proactive here. We also have another question. Someone is asking about foreign currency. If they can invest in the equity fund, with foreign currency, or it has to be in Naira.
Okay, yeah, so I'll quickly take that. So for both FBN Balance Fund and FBN Smart Beta Equity Fund, they are both denominated in Naira. So all assets are in Naira. So you would have to invest in Naira. So it's at your discretion to engage with, I mean, our investment advisors to convert your USD into Naira if, I mean, you are comfortable with that. However, you can also choose to invest in the FBN Blended Dollar Fund. In this case, this is a fund that is denominated in USD and also provides you with leeway to gain exposure to US equities. So if you choose to, I mean, retain your investment in USD, you can just invest in the FBN Blended Dollar Fund.
Thank you, Gbolahan. Like I said earlier, we have something for everyone. Whether you want investments in Naira, you can invest in the balanced fund or smart equity fund. And if you also want some investments that has exposure to equities using your foreign currency, you can invest in the FBN Blended Dollar Fund. Someone has also asked the same question, and I'll direct this to Fiona. Can I trade or purchase equities in USD through First Securities?
Yes, you can. That's a short answer. Yes, you can. Just contact us, reach out to us, and then we'll guide you.
Okay.
And Ayo,
Okay.
to the last point that Gbolahan was making, I was speaking to somebody just this week, and he mentioned that a client of his, this is another stockbroking firm, a client of his gave him 100 million naira to buy shares because, I mean, stock market is going up and all that. So this guy is bullish and wants to take position. So he gives him the money day one, day two, he calls, how much have I made? Day three, how much have I made? Day four, how much have I made? And I mean, the guy is like, what's going on? This guy needs to understand that investing in equities is not like this. So guys, what I would say is, if you want to invest in equities, you need to have patient capital. Sometimes you go into the market, buy a particular company, and in the next day or two or three, you've made about 20, 30%. There are other times that you need to be a bit more patient. So when you decide to do equities, please just be a bit more patient and give it time so you don't lose monies.
Patience, capital is used. Okay. So I have a question to Laura. This is, I think we've answered this question before, but I'll just like to ask again. Please, when I invest in the equity fund, will I know the stocks my funds are invested in?
Gbolahan actually answered it because he made a lovely
Yes.
comment where he said part of why, and I think Abiodun alluded to that at the beginning. So part of why employing a manager is to take away the stress of discussing, of knowing what is happening, of understanding. That being said, though, it's important that you are able to check that the manager is doing what they're supposed to do. So, for example, like GB had said, we have SEC guidelines around the amount of the portfolio that should be in equities, for example, and should be in various asset classes. So we do publish that. We also publish a fact sheet that shows our top holdings, that shows the proportion that we have in various sectors and various asset classes. So we do try to carry our investors along so that they understand the kind of risk and the kind of positions we're taking in our portfolios. But honestly, the real focus is about understanding that we are professional managers, and really it is the thing that puts money on the table and puts money in our pockets is that we perform well so that our funds keep on growing. So actually it's in our best interest to ensure that our funds are performing well so that they can grow and so that they are easy to sell. We've had them since 2008. Right, and it has been a strong performing holding over that time. The Smart Beta Fund was launched in 2016, and again, it's coming up to its 10th year. We've also had very strong, consistent performance over that time. And so, yes, what we try to do is ensure that everyone is carried along, I think, as much as possible. Yes, we may not necessarily carry our investors along in terms of this is exactly what we're buying from one day to the next, but frankly, that's the point of the manager, so that you're not stressed with all of that. That's what we do on a day-to-day basis, and we put out our monthly fact sheets to carry our investors along around what's happening in the funds, how they're invested, how they're performing day to day.
Oh, okay. Thank you very much. As we're wrapping up the boot camp, I would like to stay with you, Laura. We have some of our attendees, mentioning that they already have the money market fund. How can they invest in any of the equity funds? But I'd like you to talk about the importance of diversification, with respect to risk. How can diversification reduce risk?
Okay. And I think it's an excellent question because, I do see a lot of the comments and questions around, I have money market fund. What do I need to do? I need to do something next.
Yeah.
And the truth is, when we think about diversification, right, in most normal market conditions, all assets, all investments don't move in the same direction at the same time, right? So imagine you're in a situation where, say, oil prices are rising materially. You can imagine that, that's great news for like Seplat, because Seplat explores crude oil and it sells it. So if crude oil prices are going up, great, revenues would be flying. You would expect that their market performance would reflect that. But on the other hand, in that sort of situation, many companies that use fuel as an input, that's a negative because it means that costs will be rising and that's bad for their profit. Again, all things being equal. So you would expect that their share price would reflect that. The point is that, with markets, there are winners, there are losers. You want to ensure that your portfolio has a mix of everything. There are market conditions where money market yields are rising and are high. There are times where bonds are the flavor of the day, where equities are doing it. Even within the equity market, there'd be times where certain stocks, certain sectors are doing well and others are not. The point is you want to create a portfolio mix that has different asset classes, different currencies, different sectors, so that you're creating a long-term sort of less volatile situation. I'll tell you guys a story. So I started my career in 2008, and I think I started my career perhaps at one of the most volatile times. And I think that has shaped why I believe that diversification really is the way to go. So it was 2008, I started at Barclays in investment management. And maybe like 2 weeks after I started, Lehman Brothers, if you guys know, declared bankruptcy. And I recall the day clearly. It was like a Monday morning. We all came into Canary Wharf, walking up from the station in London. And we find that our colleagues at Lehman Brothers are coming out of their office. They're all looking really sad. And for those of us analysts in the banks, we're at the bottom. We had no idea what was going on. We were sort of the babies of the industry.
Laura, we can't hear you. I think you're muted.
So I had friends who went on to pack their things. It was a crazy time, but it shaped how I think about markets and investing.
Hi, Laura. Hi, Laura. I think you're muted.
You can't put all your eggs in being in more than one market at every single point in time. That event, the subprime crisis, it was systemic. There were losses everywhere. So really, it didn't matter how diversified you were. To be honest, you would have made huge losses. But that shock at the start of my career was the one thing that stayed with me throughout. And it's the reason why I'm a big preacher of, just be diversified, just buy a bit of everything, because life and markets can be very, very, it can be crazy. You don't on the wrong side of things. You don't want to have lost everything because you put your money in a single investment that happens. Because an investment losing money doesn't mean that there's any fraud. Sometimes people think, oh, I've lost, the manager lost money because there was person. There's no fraud sometimes, it's just markets. Stock prices rise and fall. That's just life. So you have to be diversified. 100%.
Thank you. Thank you so much, Laura. Interesting story there. As we wrap up the bootcamp today, I think it's been engaging. We've had a lot of questions, and we've also answered, the questions that we've had in the question and answer. I'll just like to wrap up, just reiterate to our attendees the importance of an equity fund, also noting that an equity fund, you must have the patience capital. The equity fund has been outperforming in this year. So, go for an equity fund today, have an equity fund because it allows diversification, and just ensure you follow the right organization like First Asset Management. So thank you very much for joining our webinar today. I hope it's been enlightening, it's been educative, and I hope you're now empowered, and I hope we've been able to just conquer your fear, just allow you to conquer the fear that you have when you want to invest. Thank you very much, everyone. Thank you for joining. We really appreciate this. Please don't forget to follow us on all our social media platforms: X, Instagram, YouTube at First Asset Management. And note that today's recording will be on YouTube. So if you want to go back and listen, you can actually enjoy it on YouTube. It's at First Asset Management. Also, if you have any immediate questions or you need any support, please send us an email. It's talktous@firstassetmanagement.com. We would be happy to guide you, and just hold your hands in your investment journey. Thank you very much, everyone. Thank you. Have a good day. We wish you a safe and productive day. Thank you all.